Hey there, I'm Katie Fisher, and today this is going to be a little bit different. Instead of teaching you a lesson, well, there is a lot of lessons in it, but I'm here to share what I learned about getting audited. Sharing what I learned walking through the process of getting audited. In 2016, we were audited both personally and for our business. Primarily, it was for our business. We have several businesses. We're multi-passionate, I guess you would say, and we also had flipped and sold a house that year, and so they had some questions about some things on there. But what I wish somebody would have told me. So let's get started. This is a lot more than what I thought. Okay, so you're gonna get your letter from the IRS, and it's gonna say, hey, we want to. It doesn't actually call it an audit. It calls it an examination. So I was a little confused about that. We got a letter saying that they wanted to examine 5 areas in our business. So cost of goods sold, subcontracted labor, for my husband's business, the house, they wanted to know like why we paid somebody a certain amount of money, and then cost of goods sold for my business, and I think the other thing was repairs, maybe. I should have got the letter out so I could have just told y'all, but they questioned, they had 5 things that they wanted documentation on. So you have between 10 to 15 days to gather this documentation and mail it to them. That's right. I thought that we were going to gather all of our documentation, and then we were going to schedule an appointment, and we were going to go to their office, and we were going to like go through it together, and it was going to be like a good old time. And that is not the case. So you have 10 to 15 days, depending on how long they decide to give you. But typically it's 10 days to get all of your documentation, or burden of proof is what they call it, together. So this is everything from bank statements to receipts to accounting software, sheets. This is everything that you can possibly provide. This is your one shot to send it to them. And then they're going to schedule a call. So you have to send them this information prior to your phone call, which again, like I said, they will call and schedule that phone call with you, or you have to call them and you schedule the phone call with them. And like I said, typically it's between 10 to 15 days, depending on that time period. And you have to make sure that they receive your documentation before the phone call. So what I did not know, and what they failed to tell us whenever you make your first phone call, and you're setting up your actual like examination phone call, it's really like nonchalant, really casual, right? So they don't tell you that this next phone call, you need to be ready to like tell all, right? So the examiner was super casual when we had our actual examination phone call. So like, tell me about yourself, tell me what you do, da 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 da. It was very casual, right? So I came into that process kind of like letting her lead and just answering the questions very vaguely. That was my very first mistake. I did not realize that this was like the legit examination phone call. This was your one shot to tell all. And if you don't provide the information and details in that phone call, then you're kind of just out of luck. So what I wish I would have known specifically about this phone call that probably would have changed a lot of things for us. And I'm very passionate about this phone call because I think it was probably the most frustrating thing for me, because I was like, after the examination process was over and we got the documentation, they requested some more, and then we did another phone call, and I was very frustrated because at that second phone call that we did with her, she said, well, you didn't tell me that. And I was a little frustrated because I was like, I didn't know that I needed to be so detailed with things. And so that was a little frustrating. And so I'm going to share with you guys some of the ways that you can prepare for that first examination phone call or meeting to make sure that you don't have the same thing happen to you. Okay, so make a very detailed list of every item that you sell. And the reason you want to do this, so specifically for me as a creative business owner, she asked me, what do you sell? And it was really, like I said, super casual, very vague. She said, so, what kind of things do you sell? Specifically what she said, what kind of things do you sell? And so I told her, I crochet things, I make t-shirts. I said, pretty much anything crafty, I make it. And my answer was very vague and non-specific. So when she did our examination, anything that was not yarn, t-shirts, or something that she could tell specifically was like craft related, she threw it out. So every Hobby Lobby receipt that said home decor or did not say wearable arts, she threw it out. And the reason that she did this was because she said, you didn't tell me you made anything else. Okay, so if I had to do that over, I would have made a list of everything that I made and sold. Okay, I also would have sent in proof from my Etsy shop and website of all the things that I made and sold, just as an additional resource and additional, proof of the things that I made and sold. The second thing that kind of tripped us up and that I think that I would have done differently. Obviously, during that phone call, that was pretty much the only thing that she asked about. As far as my husband's, our construction company, I mean, those expenses are pretty straightforward, and she didn't have any questions about that. But during the phone call, I think that I probably would have had, like every area that they were examining, I think that I probably would have benefited from having like wrote down every single specific detail about that area. So that way I could have provided that to them in the phone call as well, been very, very specific, more details the better. And you can't really go wrong. More the better. I think, I don't know, the box that we sent them of documentation and paperwork weighed 35 pounds. And that is one thing that when we did take it to tax court, the actual lawyer, so they hire a lawyer that represents you and they bring it before the IRS. They're like the middle person. Mediator is actually what they were called. She did say that we had sent in a ton of paperwork. Most of the time, people don't have that much documentation. And she said she felt like the examiner may have just been a little overwhelmed by everything that we provided and didn't know, even though everything was organized and had spreadsheets, she said that maybe she felt like maybe she didn't know how to decipher all of the information that we had presented to her, because typically people don't have that much documentation. She said, typically people will just like send in a bank statement. And one thing that we did learn is that over 70% of people do not even like appeal it. They don't contest it. They don't nothing. They kind of just like go with whatever the IRS says. They don't even try and prove that they're wrong. And I thought that was very surprising. But she said that it's, it's a headache. It's tough to deal with, you guys. It took us over 18 months, which granted, the closing part of it happened during the beginning of COVID. And so that did cause a slight delay. But she said a lot of people just don't want to deal with it. And that is what the person who was the mediator. So so after your phone call, they're going to take all of that information in, and they're going to look at everything that you gave them, and then they're going to send you a letter, and they're going to say, these are our findings, sign it, you're done. Okay, so we did not sign it, we did not agree, and that was because the very next thing that I'm going to give y'all some tips and tricks on, so we were being double taxed on money that we had transferred, and loan proceeds. So how do you miss this, right? But because we did not provide documentation on those loan proceeds, I didn't think that we needed to. They considered that income that we did not report. So not only were they taxing us now on that loan proceed income, or loan proceeds that they thought was income, but they were penalizing us for income that we did not report in the amount of $160,000. Yeah, that's a lot, you guys. Okay, so the other thing that I failed to mention at the very beginning of this video, and I'm sorry that it's kind of all over the place, but when you get audited, so we got audited for 2016, that automatically meant that we had to send in records for 2015 and 2017 as well. So in our case, they requested, so we were only examined for 1 year, but they request documentation from the year prior and the year following the examination. So we didn't have to just provide 1 year's worth of documentation, we had to provide 3 for all of the areas that they requested, including bank statements and credit card statements. Okay, and that's very typical from my understanding, is they typically will request the year before, the year in question, and then the year after. So be prepared for that as well. And I just recommend you guys, keep your tax returns for at least 7 years like they suggest. So like I said, you do the phone call, you send in your records, you do the phone call examination, and then they're going to send you a letter back saying these are our findings. That's when we're like, okay, yeah, something's wrong. We definitely, need to hire a tax attorney or somebody else to represent us in tax court, because I do not have the license to be able to represent us in tax court. So we went on the search and honestly had a very hard time finding anybody. It just wasn't, it was very difficult. So we found 3 people and interviewed 3 different people. Our very first one was a tax attorney agency. So this tax attorney did not actually he had an office that he rented out, and he had EAs, tax attorneys, and CPAs that worked for him. He required a $5,000 retainer, and then we would have had to pay him 35% of what he saved us. So we chose not to go with him because it seems like his defense tactic was, instead of proving that we were not in error, he was more about proving that we couldn't pay the tax liability. And unfortunately, that was not the case for us. So we just felt like that was not the best way for us to go. The second person that we met with, his fees were, again, his fees was a $1,500 retainer and 15% of what he saved us. He was an EA, and that's ultimately who we ended up going with. And had great results with that. However, we did interview a tax attorney. He was straightforward and straight and honest with us. He said, hey guys, once you take this to tax court, I don't see any issues, and I don't think that you're going to need me. So we appreciated his honesty, and his fee was 25% of whatever they save you, with a $5,000 retainer that does not count towards that. So you had to pay a $5,000 retainer to obtain him, and then 30% of whatever he ended up saving you. But he personally himself said, hey, I don't think you guys guys need me. I don't think you need to incur the cost of this. So it is what it is. Ultimately, our EA, who we hired, ended up costing us about $15,000. Bless my husband's sweet little heart, he did negotiate, and so instead of doing the 15% of what they saved us, we ended up saying, hey, we'll pay you this max, and we're not paying you any more than that. So it ended up working out well in our favor, because he did end up saving us quite a bit, a lot of money. So we would have ended up having to pay him substantially more than that. But based on the work that he did, I feel like that was fair. And I want you guys, one thing that I was confused on is that when we hired an EA or a tax preparer, I assumed that they were going to, or a tax attorney, I'm sorry. I assumed that they were going to take our records, they were going to get them all like organized, and they did not do any of that. That was still on my plate and my shoulders, to provide all the documentation that the IRS requested. All they did was represent us. And he did make a few changes to like depreciation and things like that. So he did do a few things there. But other than that, everything else was kind of on my plate to get done. So just because you hire them does not mean that they're going to actually do any of the work for you. They just represent you because they have the license and knowledge to be able to do so. So like I said, we chose to take our appeals court, and I'm going to tell you guys first my misconceptions that I had there. So again, I thought we were actually going to go to court. We were actually going to like be able to bring our documentation and set before someone, and they were going to be able to see our faces and see that we were legit people. And, you know, we were going to be able to explain all of these transactions. Again, I was very, very wrong. So how this works, how tax court works is, you know, we sent in a request for appeals. They approved us for tax court. We got assigned a sweet mediator, and so she does not work for the IRS, but is paid by the IRS. So it's super weird, but they're like a middle person who you present your case to. So our IRS examiner sent all of our documentation, all of her findings, all of her notes, everything to the mediator. And so the mediator examines what the auditor did. She examines what we sent in, and then she actually like digs in and gets additional proof. So we had a total of 5 meetings with our IRS examiner, our mediator. She was amazing, you guys. Like, she legit like dug in, asked questions, asked very specific questions, very detailed questions, and you could tell that she was actually like looking at our receipts and our documentation while asking the questions. And she puts a case together either for you or against you and presents it to the IRS. Thankfully, in our case, she put a case together for us and presented it to the IRS. And first presented the examiner's mistakes and faults, and then presented areas where, you know, our documentation was correct, and this is why. And we provided additional proof. So we had to provide proof of the loan proceeds, which was trying to track back checks from years prior was difficult. So you have to go to your bank and you have to like have the exact check. And then, so we had to find the check where the loan proceeds were deposited. Then we had to find the checks for what we purchased with those loan proceeds, and provide titles, bill of sales, and then obviously like loan documentation for all of those transactions. We also had to provide proof that we had transferred money out of that account into our savings account and then back into that account. We own a seasonal business, and so that's kind of how we did it. In the summer, we would transfer money out to save it for winter, and then in the winter, as needed, we would transfer the money back, and they were double taxing us on that. You would think it would be easy to see those transactions, but it was not. And another thing that they were double taxing us on is, so we had a savings account. Every week I would take out $200 cash and put it in a lockbox at the local bank. And so we would save that cash as like a way of paying ourselves. And so when needed, say for example, we were going to purchase something and we didn't get a loan for it, we would go get the money out of the lockbox and deposit into our account so we could write a check for it. And they were taxing us on that money. So I had to prove that I had taken out the money, put it in the lockbox, then taken the money out of the lockbox and put it back in there. So 2 things that I will never do again and stopped doing immediately was transferring money in and out and taking cash out and putting it in the lockbox and then depositing it back. So learn from those mistakes. Any transfers, any transactions, make sure you are noting them on both ends. Every way that they come or go, make sure you're noting them. Make sure you're noting them on your bank statement. Make sure you're noting them on the memo check, the deposit slip, everything that you possibly can to make sure you are not double taxed on that. So once we got to the mediator part of it in tax court, she just asked for additional documentation on that. And so once we provided that, she was very easily able to prove that we were being double taxed on that money and that that money was not income, which reduced our tax liability by a ton. The things that she did find, we did find a few discrepancies and did end up owing a little bit more, which was just ended up being a QuickBooks error, which is now why I use Excel and QuickBooks to double check everything and work with a tax planner as well. So after that, like I said, after we had about 5 phone calls, and they were video phone calls, which is really nice. So you can see them, they can see you. And then our EA also joins. So everybody kind of knows where we're at. You can ask questions. You can, she'll tell you like kind of what to expect next, what you need to be preparing, all of those kind of things. She presents your case to the IRS tax court, AKA a person in her office. And they look over everything, and then they, again, create a documentation of their findings. On that documentation of their findings is where they'll say, hey, like, this is what your original tax return said, this is what the IRS examiner found, and then this is what we find. Here's the difference. And from that point, you have the ability to accept or decline. After you decline, I don't really know the process for that. I think it goes to a supervisor. But we did not choose to do that. We were very, very, very satisfied with their findings after reaching the tax court part of it. And so we chose to accept. We accepted, and within about 30 days, we received a letter stating what we owed. We did, like I said, we did end up still owing a little bit, but way almost 80% less than what they were originally saying we owed. Okay. So we accepted that. We so they'll email you a letter, you print it out, you sign it, you scan it back in, you send it back to them, and then you also send in that letter via mail. And then after that, they're going to send you a thing saying you owe us this much money and you owe it to us now. Actually, they're going to give you 30 days from the date of the letter, but you can set up payment arrangements if you need to. If you owe more than $10,000, you will have to call. You won't be able to set them up online. You'll have to call. You'll have to provide a financial statement, and then they will put liens on your property until that is paid. But at least they won't be seizing or levying bank accounts or anything like that. You don't get your documentation back, so make sure you only send in receipt or copies. Don't send in the originals because you won't get them back. Yeah, I think that's pretty much it. Do you guys have any questions? You guys can leave them in the comments below. I'm happy to help. But I think the thing that I just want you guys to know is, you know, that respond in a timely manner as soon as you possibly can. The sooner you can respond, the better. Have your things organized. Have summary sheets and spreadsheets for everything. And provide as much detail as you possibly can during that first examination call. And if you're not happy with it, with the decision of the first examination, don't be afraid to take it to tax court. I know it sounds super intimidating. I thought we were gonna, like, the whole process, like, we were gonna get served, we were gonna have to go to court, you know, we were gonna have to go before a judge and all those things, and that is not the case, not the case. And I am so thankful for that mediator. I mean, she really dug in deep, put her time and effort. Obviously, I mean, it's her job, but she really dug in and provided a detailed summary of our business, of our expenses, of our income, and really turned things around for us. It is a long process. It can be stressful, but know that it's not over until it's over. And if you feel like you are not getting fair and just findings, then ask for a change of examiner, ask for the supervisor, which is something that I did not realize we could have done before taking it to tax court. So we had already filed for the appeal before anyone ever even mentioned that, hey, you could have asked for this to go to her supervisor, and the supervisor would have examined it and maybe could have avoided sending that to tax court for us, but nobody told us that. So things that, like I said, I would have done different. I would have been very thorough, had a detailed list of all the products that I made and sold during that first examination call. I don't think I would have done anything different with our receipts. So our receipts, I copied all of them, attached a spreadsheet summary of all of the receipts, stating the total, and clipped them all together so they were all in the category by year that they should have been. I probably would have made more notes on my receipts and on the bank statements themselves prior to copying them. I would have wrote on all of my receipts, all of my bank statements, what specifically the transaction was for. I probably would have provided like more notes maybe, explaining like every transfer and things like that. I just, you don't know what you don't know, and I didn't know that they were going to question those transfers until I didn't know. So that's what I wish I would have known whenever we got audited. I hope this is helpful. If you guys have any questions, just leave them in the comments below.